Hi there, welcome to this week's market analysis. So as usual, what we're going to do is to go through a very quick recap as to what has happened in terms of the risk event for the week. And we'll look into next week events calendar, and I'll jump into the charts and share with you what are some of the opportunities that you want to keep an eye on for the week ahead. Now first off, let's take a look at the summary of what happened for the week. So we have on Wednesday the RBNZ rate statement coming in where the Reserve Bank of New Zealand actually raised rate. Okay, this is not something surprising. Much of the analysts has also expected a 0.5% hike, and we did see the RBNZ actually raise rate by 0.5 on Wednesday. And as I mentioned in the video last week, it's a relatively quiet week in terms of the risk event. Nothing much. And the other one over here, of course, is called PCE price index from the US. Okay, and it came in as expected, so not much of a surprise in terms of the risk event over here. Now looking into the coming week, okay, I think the focus will then go to the Bank of Canada, where we have on Wednesday the Bank of Canada rate statement. And again, we are in a rate hike cycle, so we can see that much of the analysts is also expecting a 0.5% hike from BOC. Okay, so if you're trading on the Canadian or any pair related to CAD, do keep an eye on that on Wednesday, because that's going to create some kind of volatility. Other than that, we do have a couple of holidays from various countries across the week. So you can see here on Monday we have the US bank holiday, and on Thursday we have the euro and the pound. Okay, so relatively a little bit on the quiet side of things. On Friday we do have the pound bank holiday as well, and of course none other than the very first Friday of the month we have our NFP, our average hourly earnings, as well as the unemployment rate from the US coming in as well. So if you're trading dollar related on Friday, do take note, because most of the time such event can create certain volatility in the market. Okay, so in terms of risk event, the focus for the week would likely be Bank of Canadian and of course NFP in terms of US. And do take note that we do have a couple of bank holidays spread across. So with that, let's take a look at the charts. Okay, so start off over here, let's keep an eye on the dollar index. Now for last week itself, the dollar continued to weaken, and going into this week we are likely going to expect that momentum to follow suit, and we're definitely going to be more focused on bearish opportunity. Okay, however, with such a move that has developed, if I were to pull a fit from the swing high to the swing low, we can expect a little bit of a pullback coming in from the dollar in the near term. Okay, because nothing gonna move in one direction all the time. And looking at confluencing with the potential risk event coming in on NFP, if the data is going to be very positive for the dollar, we can see the dollar pull back for the week as well. Okay, so do keep an eye on it. Overall momentum, we're still looking at bearish. However, for this week here, we can expect a little bit of a sideways move or short-term retracement to the upside. Okay, so with that in mind, if you take a look at some of the major pairs over here, we have the euro dollar recently has confirmed the upside reversal in terms of breaking this trend line we can see on the forward time frame, and the break over here is rather impulsive. Okay, so we're gonna be maintaining a bullish bias on euro dollar. However, as I mentioned, there's a good chance that we might see the dollar pull back a little bit. So you might want to be careful in a way, and I would say if you're looking for a buy, a pullback is always a better one to look for opportunities to get involved in any buy trade, somewhere perhaps back towards 1.0550, where we might come in, in confluence with the previous support level, where the trend line is as well. Okay, so overall you might want to be patient, but the focus here is still looking for buy opportunity on the euro. Now in terms of pound dollar, rather similar. Okay, in a way we kind of see this as an ending diagonal, and the market started to confirm the reversal to the upside, but it's a little bit too, I would say, too late to buy in at this current price, and personally I would suggest maybe wait for a pullback again towards maybe the 50 and 618 Fibonacci. Okay, somewhere around 1.24 even level. would be a much better price to look for buy setup for the pound dollar. Okay, overall, this might happen this week. So my suggestion is just maintain a patient perspective and see how price develop first. A lot of all these major pairs are rather similar. If you take a look at Aussie dollar, same thing over here. We kind of had a rejection. So I'm still maintaining a bullish bias, and similar to euro and pound, personally I would suggest to be patient and wait for a pullback again towards maybe 50%, 61.8 Fibonacci before we look for a buy setup. Okay, for all this setup here, you need to be a little bit patient. I would say perhaps the opportunity might come in somewhere around late Wednesday or Thursday. Again, really depends on how the market develops as the week starts off. Okay, but the opportunity might kick in somewhere maybe towards the end of the week. Okay, so maybe just keep an eye on it. Have them in your watch list, and of course, if the setup comes to you, okay, then that's where we're gonna look to take that trade to the upside. Okay, Kiwi Dollar over here, rather similar. In fact, on the daily time frame, Kiwi Dollar looks pretty neat. Okay, from an Elliott wave perspective, from this high, we kind of had a 1, 2, 3, and then over here we have a 1, 2, 3, and overall structure we have a bigger 1, 2, and 3 as well. Okay, so this kind of confluence, one of the Elliott wave pattern, double zigzag, and usually this suggests that this corrective structure may have completed, and we can start to rotate to a longer term bullish bias. Okay, and what I see on a daily time frame on Kiwi Dollar is also pretty neat. We kind of had a V-shaped formation, a very nice rejection. So going down to the forward time frame, same thing over here. Wait for a decent pullback as a corrective structure will present us a very decent opportunity to the upside. Okay, so many of these major pairs, the bias here, the direction here is rather straightforward. The only thing here is to be patient and wait for the better timing to get involved in the buy trade. Okay, dollar Canadian, we can't see that from a forward time frame perspective, we have this very strong impulse push to the downside, followed by a decent corrective pattern, and the market seems to be correcting lower. Two perspective over here is that one, we can expect dollar CAD to continue falling, perhaps towards the previous bottom over here around 1.24. Alternatively, what can happen is this can just be a three-wave pullback, somewhere towards the zone, and then from here it can rebound back higher as well. Now the key level to keep an eye on, I would say, would be somewhere around the zone, around 2680, and you want to keep an eye on how the market is likely going to develop as it reaches around this. Okay, now if we're gonna see the price going to develop into a crawl pattern towards 1.2680, then there's a good chance we might see this rebound back towards the previous high, and what you want to do is then look out for a buy opportunity. However, if we start to see that the market actually able to break through 1.2680 impulsively, and thus a correction in that level, then this suggests that there's a high probability we will continue to see more downside on the dollar CAD. Okay, combining with the risk event that we're going to have for this week in terms of BOC rate statement, much volatility is going to kick in into dollar Canadian. Okay, so do keep an eye on it. I think by Wednesday we might get a certain pattern and some clarity in terms of, do we want to look for upside or do we look for the downside trade. Okay, so that's on dollar CAD. Next one over here on the FX side, we have dollar yen, which is setting up very neatly over here as well. On the forward time frame, we can see that this whole move to the downside is very corrective in nature. Okay, and pulling in our RSI, we can start to see there's a lack of momentum building up as the market continue to fall, and therefore for me in the short term this week here, I'm looking for a reversal to the upside. Okay, one simple execution method is to look for a breakout. So if the market is able to break above this recent high at 127.6, I'll be looking for a buy trade, potential target back to the previous high around 131.2, and the protective stop can be placed just below the recent low at around 126.35. Okay, so this is more like a short-term trade. Whether the market is going to break through the previous high and continue higher, it's rather difficult to say. But at least from this pattern here in the short term, there's a high probability we might see more upside for now. Okay, so that's on dollar yen. Now, if you take a look at gold, okay, I believe that there's a high probability we are going to see a little bit more upside on gold. Especially from an Elliott wave perspective, we have completed a 1, 2, 3. We have a fib confluence here as well. Decent rejection. Okay, so all this kind of tell us that there's a good chance, at least for the short term, we're going to see a little bit more upside. So going back to the 4-hour time frame, very similar to most of the major pairs over here. The idea is that if gold continue to consolidate a little bit more, perhaps give it a couple of days by Wednesday or Thursday. If we see a decent pullback towards 50 and 618, that will give us a decent opportunity to look for a buy trade to the upside. Okay, so for gold, do keep an eye on that as well. That might give you a good buy opportunity. Okay, last one over here for today, we have S&P 500. The last week, a couple of days before the week ended, we kind of see a little strong momentum to the upside on S&P. To me, not much of a surprise as well, because again, from an Elliott wave perspective, this is a completion of a 1, 2, 3 fib confluence, so we do kind of expect a little bit of a reaction from that zone. But the question here lies is whether this is gonna be, the end of the drop, and are we gonna see a huge upside on the equities market, or is this gonna just be a temporary rebound and then we're gonna continue to see more downside? Okay. Obviously, I do not have the answer, and we need to keep an eye on the market and how it develops to give us some clue and indication as to where it's likely gonna hit. Now, in terms of 4-hour, at least for now in the short-term perspective, we're definitely going to be holding on to a bullish bias because of the momentum that we see last Friday. Very impulsive to the upside, and same thing over here. If you pull in a fib, my suggestion is if you're looking for trading equities in S&P, do wait for a pullback. Okay, you can utilize the 50 and 618 Fibonacci zone for potential entry for more upside if we do see a corrective structure pulling back towards this area. So overall, I would say that we'll continue to expect weakness in the dollar overall. Most of the major pairs are also suggesting a similar direction, including of course gold and S&P. The only thing that I would say is slightly different is the dollar yen pair, where we are looking to actually buy up the US dollar. Okay, so that's all from me for this week. I hope such video analysis is able to provide you some insights and some ideas into how you can prepare yourself and trade for the week. So that's all from me. All the best, and I'll see you guys in the next one.